Now, if you look at Ascendas share price for the last 6 months, you realize that it's been doing quite poorly. It's lost about 10% in performance. And you may be thinking, since 2020 was a difficult year for many businesses, this share price performance is unsurprising. Moreover, since November when there's news of vaccination, share price has actually slightly recovered. Now, if you compare that against STI index, you realize a different story. STI has actually, in the last 6 months, performed 13.6%. So comparing between the two, you realize that if you have chosen to invest in the STI instead of Ascendas REIT, your investment performance difference will be 23.8%. Now that is a massive difference. And in today's video, I'll be sharing with you a few key parts about Ascendas REIT. I'll be sharing with you why recent share price performance has been weak. And second part, I'll be sharing with you the growth story of Ascendas so far, and why it is still a stable company. But last but not least, I'll conclude as to why I'm not excited about its future. If you're interested to find out more, continue watching on. Hi guys, welcome back. Now let me start by sharing with you what assets does Ascendas REIT actually own. Now if you look at this chart over here, it tells a very good story. Ascendas REIT is actually very diversified and very versatile. It owns about half of its assets in business, science parks and offices. The other quarter is in industrial and data center, and the last quarter is in logistics and distribution centers. Now, in a lot of ways, these property assets are actually very pandemic proof. They have actually, leases that run for many years ahead. But if you pick up points from the earning transcript, which I've done for you already, you realize some reasons as to why, investment performance has been poor recently. Now, Ascendas REIT has actually given out rental rebates to assist struggling businesses, which has caused distributable income to fall by $17.8 million. And due to COVID-19, Ascendas REIT has actually experienced a drop due to business foreclosures and non-renewals. As to the Singapore properties itself, they have actually seen occupancy rate slightly drop further to 88.4% due to non-renewals, especially on the lease at 11 Changi North Way. Now, if you look at these three sectors, you'll be thinking that business performance is actually quite poor, but it's actually not true. If you look at things in totality, you realize that gross revenue has actually climbed up by 13.6%. Net property income has actually climbed up by 9.4%. This actually factors in all the three negative points that I mentioned already. And yet, dividends per unit has actually fallen by 6.1%. Now, for many investors, it's about income, it's about dividends they can collect. So any drop in dividends per unit is actually negative. But if you think about it, what exactly constitutes the formula of dividend per unit? It starts off with, on top, distributable income, and as a denominator, total number of outstanding units. Now, if you think about this formula, you understand why this dividends per unit has actually fallen. Ascendas REIT has actually raised $1.2 billion as of end of 2020, and that's actually swelled up the number of units. And the reason for them doing that is two. Firstly, they've actually committed to buying properties in San Francisco. $380 million will be funding towards that purchase. And they've actually started to collect monies in anticipation for future acquisitions. They're actually planning to buy $614 million worth of data centers in Europe and another $180 million worth of suburban office properties in Australia. Now, so they are raising money in anticipation for future acquisitions to help unit investors. So for long-term unit investors, this is actually good news. They have plans to mobilize this money, and in future, you will see that the dividends per unit actually climb back simply because there will be more income coming in from this money that's already been raised for acquisitions. Now, in the next segment, I'll be touching with you what exactly is the growth story of Ascendas. I'll give you a full breakdown of its history from 2015, where it has started to morph its geographical diversification all the way until now, so that you can understand what its direction is moving forward. Now, if you have benefited, smash the like button so that more people can see valuable content like this. And again, I've actually a Telegram group that I mentioned about passive income investing as well as REITs. So if you're keen to find out more, look for links below for that Telegram group. Now let me show you what exactly Ascendas REIT has done over the years. And as of September 18, 2015, Ascendas REIT made a massive acquisition in Australia. That acquisition was about 1 billion Aussie dollars worth. Now at the point, conversion from Aussie to Sing was about 1.1, 1.2. So that acquisition was like 1.2 billion Sing dollars. It's the first time that Ascendas actually moved to down under. Now at the end of 2015, Ascendas REIT also made a further acquisition, and that acquisition was for one at Changi City, and that acquisition price was $420 million. Now, if you walk around Changi Business Park, you have seen before Changi City Point, and that is actually the property that's actually acquired. So if we move forward to 2016, what I've highlighted for you in these various sections is actually Ascendas REIT divesting China assets. Various China assets being sold from May, June, all the way. And this has actually removed any exposure Ascendas REIT has to China. Now, towards the end of the video, I'll be touching a little bit more as to what I think is the future with China. And just keep in mind this portion of divestment. And the last property they've actually divested was in October 2016. Now, at the end of 2016 December, you realize that Ascendas REIT made further acquisitions in Singapore. Science Park 12, 14 and 16 for again $420 million. With that acquisition, Ascendas REIT has actually dominated Science Park's properties because they own multiple assets over at those business parks. Now let's move forward to July 2018. Ascendas REIT and its sponsor then actually made its first purchase in Europe. Now keep in mind, this gives Ascendas yet another exposure. They've bought Australia, they've sold away China, and now they're buying into Europe itself. And as of September 2018, Ascendas REIT actually buys more UK properties. These are actually logistics properties. And this is actually in pounds, 257 million pounds. So if you convert Sing dollar, it's also close to $400 million. Very substantial. Now, if we move on to 2019, this massive news. CapitaLand has actually acquired Ascendas SingReach, which is Ascendas' sponsor. This acquisition is $11 billion worth. So from then on, CapitaLand has become Ascendas REIT's sponsor. So at the end of 2019, in November, Ascendas has made another drastic change in terms of its business strategy. Firstly, Australia, selling away China next, and then moving towards Europe. And then now in November 2019, Ascendas REIT has actually purchased for the first time properties in US. Now the total value is 1.66 billion, but the US assets is about 1.2 billion. Again, a substantial and decisive move to move towards US assets. And that's the first time they've actually acquired properties. But they did not stop there. In November 2020, Ascendas REIT has further acquired 2 more office properties in San Francisco. Now, these 2 US properties are actually a move by Ascendas REIT to get closer to tech players. Now, the tenants for these 2 properties are actually Stripe, which is online payment services, and Pinterest, which is also very well known. Now, there are several benefits moving towards overseas assets. The first is that the weighted average lease expiry is typically very long. The next few years, there's actually a contract for it with escalating factor of rent. So that means to unit holder, it's a guaranteed renewal income that's escalating. Now, the overseas assets are usually in high growth space, which means the occupancy is typically better than in Singapore. And what we can find out is Australia, UK is about 97% and US about 93%. So these numbers are better than Singapore numbers. And the next part they have actually mentioned also is being into overseas assets, they can serve their customers better. For example, if their customers need properties in Australia, UK and US, they actually own something and they can actually be working closer with their customer. And one that they've mentioned is actually Northrop Grumman. And this is actually an airspace company and they've actually worked closer with them in US and Australia. And this actually benefits Ascendas as a business. It gives them an edge in terms of serving their tenants. So why am I not excited about Ascendas REIT? But don't get me wrong, they are not a bad company. In fact, they seem to be pretty well run across the years. My main concern for Ascendas REIT is actually reflected in this chart over here. Take a look at this. This is actually the average market rents, and this rental index reflects all of Singapore's industrial properties. What do you realize since 2015? The line has been declining slightly, correct, if not flattish. And the main draggers are actually in logistics and light industrials. Do you remember the start of the video I shared with you? A quarter of Ascendas assets are in industrials, a quarter of its assets are in logistics. So Ascendas REIT has exposure to these sectors itself. And maybe they've actually forecasted that growth in Singapore is actually slowing down. And that explains the reason why they've actually consciously moved towards overseas investing across the years. And let's look at how they've morphed their business. Before 2015, it was primarily Singapore. But 2017, you see 13% overseas already. And as of now, they are having 36% overseas in terms of its assets. So management has actually done their job. They've actually diversified to higher growth areas to await recovery in Singapore's industrial properties. I guess the consequence of having so much in Singapore industrial properties can also be seen in their dividend growth. It has been weak since 2016-2017, correct? So this is what I've circled for you. Growth of its dividend has been slowing down because again, a lot of his assets are still in Singapore. And when I looked at the books itself, I realized the occupancy in Singapore is about 88+%, which is actually quite low. That really suggests that there's not excessive demand in properties. I looked at the details. One example is 2 Corporation Place, which is 69% occupied, and another in IBP, which is only 55% occupied. So indeed, occupancy rate is pretty low, reflecting weak demand. And even other competitors like REIT, which owns a lot of industrials, have actually only about 90-91% in terms of occupancy rate. So it's actually across the board. I hope to see vacancy rates start to drop, and with that, the rental index can start to climb. And once that is achieved, maybe Ascendas REIT can show a growth in terms of its dividends moving forward. Now the last key part is CapitaLand is now Ascendas REIT's sponsor. And from my understanding, CapitaLand, although they own properties in US and UK, they are very strong in China, something that Ascendas REIT has actually moved away from, so I'm not too sure about the synergies over there. So if I think about it, is Ascendas REIT better than, for example, Mapletree Industrial Trust? I'm leaning more towards Mapletree Industrial Trust simply because I've seen Mapletree's acquisition in US. I do believe they might be able to provide a stronger pipeline towards Mapletree Industrial Trust. That's why, if you haven't seen my previous presentation on Capital DC REIT versus Mapletree Industrial Trust, look for that tutorial also, because that really shows you another competitor of Ascendas REIT. And if you are thinking, REIT investing is too difficult to stock pick, maybe you want something diversified, check instead on SYFE REIT Plus, which is a previous tutorial I've done. This portfolio gives you exposure to multiple REITs and saves you the hassle of thinking deeply who is going to be the winner in the next few years. So with that, inviting you to either of these videos, I'll see you there. Take care and goodbye.